Everyone knows it's been a very dry 18 months for home sales. As mortgage rates rose starting over 2 years ago now, payment affordability got dramatically worse and home buyer demand dried up. At the same time, seller volume dried up. 2023 saw record few sellers each week who listed their homes. But now sellers are coming back into the market. New listings volume is 18% more than a year ago this week. And total inventory is gradually climbing about 1% per week. Last year, it was still declining in April. So as we roll into the second quarter, we should have accelerating inventory growth each week too. All these signals point to rising home sales in 2024. 2023 was very low, so rising isn't very difficult. But I want to make this point about what the data is showing us now regarding home sales, because there's still a lot of people who assume that mortgage rates have to fall before we see a rebound in home sales. But the data is showing us that we only need stability in the mortgage markets. That's what we're witnessing now, and that's what I will share in the data today. And that's why Altos Research, we track every home for sale in the country every week. The data so often defies expectations or changes very quickly. So we track all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand the market immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the details of the U.S. real estate market as we've now wrapped up Q1 of 2024. So since we are talking sales volumes today, let's start this week with the pending sales data. This week saw 69,000 new contracts for single-family home purchases across the country. There were another 15,000 condos sales started. So that's up 3% for the week and a healthy 13% more sales than a year ago. So 13% growth over the same week last year, home sales. That brings us to 367,000 single-family homes in the contract pending stage right now. That's 7% more than a year ago. This chart is showing new contracts started in a given week. A house gets listed for sale, it accepts offers, and then goes into contract. The escrow period is usually 30 to 45 days. So these homes will close in April and May. And so there are 7% more homes sales in contract, and this week saw 13% more started. So that implies the sales levels are increasing. It implies some durability to this trend. We've now seen really a month or so of mortgage rate stability. And so we can see the sales rates starting to pick up again. And, you can see that in that weekly growth in the chart here. A year ago in April, sales were very low. And so the dark line now is showing nice, consistent market expansion over last year. So 69,000 new contracts pending this week. And I'm hearing anecdotally that mortgage colleagues are saying April is shaping up to be a nice growth month for them, and you can see why. Now, I was discussing with HousingWire's Logan Mohtashami about comparing the Altos pending sales data to other indicators of home sales, specifically the Mortgage Bankers Association's Purchase Mortgage Applications Index. That index tracks mortgages and is really still not showing growth over last year, but our pending sales data is very obviously showing growth. Why the difference? One reason may be that we've had a shift to more cash purchases. So when mortgages are more expensive, then a lot of Americans have cash, and then they may choose to buy a home with cash. So you can always borrow against that later if the costs come down. NAR is reporting 33% all cash buyers, which is the most since 2014, when buyers and investors were still cleaning up a lot of distressed properties. So home sales may be a bit decoupled from the MBA mortgage data this year. That's just something to keep in mind if you watch both data. More sales can happen since we are finally getting more sellers. New listings dropped a little from last week, just a little bit from last week, but we still have 22% more sellers hitting the market this week than the same week last year. That's 18% growth over last year when we include the immediate sales. So these were newly listed and are already in contract. The immediate sales don't add to active inventory because they're already pending. So That's 60,000 new listings and another 17,000 immediate sales. Not only are new listings growing, but there were 8% more immediate sales than a year ago. So these are all encouraging signs for sales volume in the housing market. Now, I've changed up the data presentation in the new listings data this week. In this chart, we are looking now at the average new listings per week for the first 13, 14 weeks of the year, first quarter, Q1. Q1 is the lightest period for sellers, and it really starts to accelerate in March, and then Q2 are the biggest months. So if you recall, the new listings chart that I usually share here has a lot of bumpy noise week to week, squiggles up and down. So this chart helps us see the bigger trend. And so here's how to read this data. Each bar here is a year. The average total count of sellers from each week in the quarter. Average total count of sellers. And notice how every year, as mortgage rates were low and falling in the last decade, we would have fewer and fewer sellers each year. That market shrinking trend didn't reverse until rates started climbing. So I should point out that most of the time in these videos, I focus on single-family homes to give a very precise picture of housing trends in the U.S. But in this chart, I've also included condos so we can see the total number, the absolute total number of the homes being listed. And I do this because I'm interested in the total listings volume approaching 100,000 each week. 100,000 is important because a normal year of home sales might be 5 to 5.5 million transactions in a year. That implies you need to average 100,000 sellers every week to keep inventory stable. If we're going to do 5 million sales in a year, this number has to be pretty close to that. And you can see why 2023 had so few sales, at least partly because there were so few sellers. In Q1, there were 12% more sellers this year than last. That's a good sign. That's growth. By the way, the quarter averaged 12% more sellers than last year, but this week had 18% more sellers. So that seller growth is accelerating. More sellers means more sales in 2024. This is underway, and the trend seems very clear to me. I suppose the trend could reverse if we have another mortgage rate shock and rates jump closer to, say, 8%. This brings us to total inventory. New listings are up 18% year over year. New contracts are up also, but only 13%. So total inventory of unsold homes is growing. Now, I've showed how last year was very obviously a supply-constrained market. This year, the dynamic is different. And the longer mortgage rates stay higher, the more inventory will build. So there are now 517,000 single-family homes on the market across the U.S. That's 26% more homes now than a year ago, more than 100,000 more. This expansion of inventory is now 20 weeks in a row. The takeaway here is that the expansion of inventory is from rates staying high. If rates fall notably, home buyer competition will heat up, and this inventory trend the growth trend will finally reverse. In this chart, each line is a year. The two bright red lines are the last 2 years. And you can see 2022, when mortgage rates started climbing dramatically, so did available inventory. You can also see the annual seasonal curve in all the years. We should have close to 700,000 homes on the market in August or September this year. That'll feel like a lot. It won't actually be a lot, but it'll be the most homes available since 2019. The longer we stay at higher mortgage rates, the more inventory can build back to the old normal levels. Now, this is a national view. There are definitely differences in prices in parts of the country, different parts of the country. The Gulf markets have more inventory and more inventory growth, for example. Many are back to pre-pandemic levels of inventory. Some of the Midwest and Northeast are just now coming off the pandemic lows of available inventory. Though pretty much every place in the country, inventory is growing. I also mentioned cash buyers earlier. Anecdotally, the cash buyer markets like some of Southern California seem to be building inventory more slowly, indicating stronger buyer demand there. So we've been talking about how home sales are increasing. This week had 13% more sales than a year ago, but how are home prices holding up? The median price of all those homes that got offers this week is $393,775. That's 5% higher than a year ago. The price, this is the price of the new pendings, new contracts. And this price is a different measure than I usually share in our weekly reports. There are many ways to measure home prices. What do we want to look at the price of the homes that closed escrow last month, the asking price of the homes that buyers will see if they walk into the market today and want to buy, or in this case, the price of those homes that got offers, indicating this is where the buyer demand is. Normally, we talk about the asking price of all the homes on the market. If you want to buy a home, you walk into the market today, the median price of single-family homes in the U.S. of all the options you have is $439,900. That's up a fraction from last week, and it's only 0.5% higher than last year at this time. But if we look at the price of the homes going into contract, we can see where the buyers are and the price they are paying before the sale is closed, by the way. This is before the sale is closed in the next month or two. The median price of the new contracts this week is $393,775. That's 5% more than a year ago. I've been liking this chart because, at this data point really, because you can really see clearly where when mortgage rates hit home buyers and how quickly they react. There are two gray sections here highlighting 2022 when rates spiked, the price people paid for homes dropped. The dark red line is this year, and it looks like home sales prices will reach the all-time high of 2 years ago in the next few weeks. If we see mortgage rates spike, though, you can see how quickly home buyers will react and prices will drop. Now, if you've been paying attention to these weekly data videos from Altos Research, you'll know that one of the areas I've been most sensitive to are price reductions, the percent of homes on the market which have had to lower their asking price. There are now 31.9% of the homes on the market that have taken a price cut from their original list price. That's up 50 basis points from a week ago and is 1.4%, 140 basis points higher than a year ago. So when price cuts a year ago were still falling with falling inventory. Because we had so few sellers last year at this time, you can see how this data point is a very good indicator of that supply and demand balance. So I think we could see at that time buyers grabbing up any good property that was available. Buyers now in most markets feel like they have less urgency, and sellers react to that fact. In this chart, each line is a year, and it's okay for price reductions to climb at the end of March. It's not catastrophic, but we definitely have more homes on the market now with price cuts than in any recent March in a decade. This year, the dark line towards the left end of the chart here is you can see how the price cuts are in the normal zone. We haven't had a normal year in so long, but the curve is on the rise. And so this is a leading indicator of future sales prices. And this is something we want to pay close attention to. Will finally rising supply keep a lid on home price appreciation for the year? So this is one indicator implying yes. In a slightly contrary data point, the magnitude of those price reductions is $15,000 now. So on average, a $15,000 price cut from the original list price, that's like 3%. Last year, it was $18,000, meaning last year the price cuts were steeper. They're still hung over from the really slow fourth quarter of 2022. So I'm keeping an eye on the magnitude of the price cuts also to see if that maybe starts climbing, and that would be a second note for the future of home sales prices, something to keep our eye on. And that's why we do this data work every week. The market is trying to grow, but home buyers are obviously sensitive to the cost of money. Buyers and sellers don't necessarily see that, though. They see beyond that. And so if you need to help buyers and sellers see the actual data, you should join us at Altos. Go to altosresearch.com, book a free consult with our team. We will help you know how to talk about the market with your clients, your buyers and sellers, prospects today. So there's a link in the description below. Click that to let's get started.